What's up everybody? GenExDividendInvestor here. In this video I'm going to share data highlighting that women are better investors than men, which is probably stupid of me to do since 94% of my viewers are male. But what's not stupid is learning why women's portfolios have outperformed men's portfolios on average so that you can leverage their strategies to your advantage. Now, when I told my wife I was doing this video, she said, "Yeah, it's because you guys withdraw too fast," and then she laughed at me. So if you appreciate crude investing humor, then please hit that thumbs up button, subscribe if you haven't yet, and click that bell notification. Now, Fidelity analyzed over 5 million brokerage accounts from 2011 to 2020 and found that on average, women outperform men by 40 basis points annualized, which is 0.4% per year. That seems pretty small, right? 0.4%? Well, what does the math say? Let's pretend that an example person named Jack starts with a $10,000 portfolio and contributes $100 a month for 40 years at a 9% return. His portfolio would grow from $10,000 to $829,000 over 4 decades. Now let's compare him to Jill, who also starts with a $10,000 portfolio and also contributes $100 a month for 40 years, but instead makes a 9.4% annualized return. We see that Jill's portfolio would grow to $950,000. So her 0.4% additional annualized return over 40 years translated into a difference of about $121,000 between the two portfolios, which means she ended up with a 15% larger portfolio. Other studies have been done which also found that women outperform men, on average, by 1% per year, which translates to an even larger difference. In our compound interest calculator, a 1% annualized better return would translate into a portfolio for women that ended at $1.1 million, which is 41% larger than men after 40 years. It turns out there are a slew of studies that have found similar results, from the Wall Street Journal to academic research. If you'd ask me who I think does better in the markets, I'd have guessed men, and apparently I'm not alone in making that mistake, because they did ask a bunch of people and 91% thought men would do better than women. Anyways, Fidelity then looked at a smaller subset of survey data to draw some conclusions about why women, on average, have better portfolio outcomes than men over long periods of time. Forbes and Reuters also shared their thoughts, and I'll summarize the findings. One reason that women outperform men is because men are 35 to 45% more likely to do more stock trades, and generally speaking, people who trade more underperform buy and holders. Another reason that women do better is that they invest more on average than men, by about 1% per year, in all their investment accounts, including retirement accounts and in taxable accounts. And that additional investing is above and beyond their better annual portfolio returns that they get. So think about that. Women invest more and they get better returns on their investments. Another key reason that women outperform is that they take less risk by investing more in diversified target date ETFs rather than in single stocks as compared to men. That doesn't mean that they don't invest in single stocks, as a study found that 67% of women invest in individual stocks or bonds. 63% invest in mutual funds and ETFs, and 23% of women are putting some money in cryptocurrencies. Men also tend to invest in more speculative, risky assets, like meme stocks or whatever. That doesn't mean women are risk averse, rather they are simply more likely to take on appropriate levels of risk in their investments than men. And an appropriate risk tolerance often leads to better investing outcomes. But just like it's not too smart to get too aggressive with investing, excessive caution also isn't wise. 31% of women don't invest at all because they fear losing everything in the markets, compared to 27% for men. So what are women doing if not investing their cash? Well, one study found that women hold 71% of all their assets in cash, whereas men hold 60%. A little bit of me dies on the inside when I think about that. Over a few decades, that could mean losing out on over $1 million of value since they're holding so much cash. Another reason women do better is because they tend to have a longer-term outlook when investing, and they aren't trying to time the market with brilliant trades. Trading constantly also tends to yield worse outcomes due to taxation being worse when you hold for shorter periods of time. Betterment found that women log in to check their accounts less often than men do, and they found that women change their investment allocations about 25% less than men do each year. So they concluded that buy and holders, i.e. the set it and forget it people, did better than people who are constantly monkeying with their portfolio. Another interesting conclusion was that women are less confident than men when it comes to managing their portfolios, and this lack of confidence helps their investing outcomes. Overconfidence often leads to overtrading. Only 14% of women say they know a lot about investing and saving, which speaks to lack of confidence, which is probably what's helping them invest carefully. And 34% of women say their financial situation keeps them up at night at least once a month. About half the women surveyed didn't know what steps they'd take if they were given $25,000 to invest in the market today. I understand overconfidence. I remember in the 90s, before the dot-com boom, me and my friends all thought we should quit our jobs and become hedge fund managers because it was so easy to make money in the markets. The more we made, the more we ended up investing in more speculative things until everything came crashing down on us and our egos had a wake-up call. As you probably know, quality companies lost less on average during the dot-com crash than the highly speculative tech companies did. Another reason that women outperform men has been attributed to how each gender responds to momentum swings in the market, and overconfident investors usually feel the need to buy more in good times and to sell more in tough times. Unfortunately, buying more when things have gone up too much and selling more when things have gone down too much are often key reasons why the majority of investors underperform the market. Studies also found that women stay calmer than men in down markets, which contributes to them holding investments for the long term, as well as protects them from locking in losses when the markets take a momentary dip. Speaking of women investors, I did a video called The World's Most Famous Female Dividend Investor, which was about Geraldine Weiss, who is also called the Grand Dame of Dividends and the Dividend Detective. Take a look at that video to hear about her unconventional value approach investment style, where she focuses on a company's dividend trends rather than its earnings in order to identify companies to invest in, as well as when to buy and sell. Geraldine was a buy and holder as compared to a trader. For most people, constantly buying and selling has proven to yield subpar performance, and that behavior is often attributed with impulsive behavior, and men do it more than women. However, strategic trades can be the right thing to do. Buy and hold doesn't mean never sell. I did an entire video on when I'd sell a stock, if you'd like to hear my perspective. Another key reason that women outperform men is because they spend more time researching their investments. This gives them more conviction on their buys and helps prevent them from being scared out of their position when the stock price falls. It's good you're watching videos like mine, as that indicates that you're putting in time to learn more about investing, and that will pay off over time. More research also helps women falling prey to listening to hot stock tips and immediately trading, which I see tons of people do. In fact, beyond just doing more research, 52% of women said they were going to create a financial plan to help them reach their short and long-term goals. Not only do they do more research, they also are more open to learn about investing from others. They're more willing to ask for help. Another reason that women do better than men in the markets is because they have more patience with their investments. Patience is key. Just remember the classic Benjamin Graham learning that said, in the short run the market is a voting machine, but in the long run it's a weighing machine. Which means figure out the intrinsic value of your investments and then don't worry about how people are buying or selling in the short term. One common thread I've seen between both male and female investors is that both wish they had started investing sooner and had invested more. So if you're sitting there watching this and haven't started investing yet, then I encourage you to start. Keep learning about investing. Learn from people who have done well and learn from people who have made mistakes. Hopefully now you can understand why, on average, that women are better investors than men. Which is also why I'm sitting in front of my computer wearing a mini skirt and heels. I'm kidding, relax. Oh my god, now we gotta deal with 1,000 comments about my terribly offensive jokes. If you weren't offended by that joke, then please slam the thumbs up button, subscribe if you haven't yet, and click that bell notification. If you were offended, then Google therapist and I'm sure you can get the help you need. And don't forget to join my free dividend Discord, a place where thousands of dividend investors hang out and chat. Thanks for watching and hitting that thumbs up button, stay positive, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.